Welcome to the REI Freedom Podcast, where we unleash the power of real estate investing and empower you to create a life of freedom on your own terms. At REI Freedom, we provide high-level acquisition skills training and coaching to take your real estate game to the next level. Say goodbye to deal cancellations and hello to consistent success. Join us on the REI Freedom Podcast and unlock your potential and claim your freedom in real estate investing.
Hey, everybody. Welcome back to another weekly episode here at the REI Freedom Podcast, where we teach you how to build a life of freedom through real estate investing. Today, we have a special guest that I'm really excited to share with you guys today. We haven't done too much in the storage space. Well, we're going to today with one of the guys who not only coaches the storage space, but is crushing it in the storage space. So I know you guys have all wanted to get into self-storage investing, and this is going to be the guy who gets you there. So today, our guest is Alex Pardo. Alex, welcome to the show today.
Jeremy, thanks for having me on, man. I'm looking forward to our conversation.
My pleasure, man. It's a great honor to have you here. I got the privilege to be a guest on your podcast. I'm really excited to share all your knowledge and wisdom with my community. Self-storage is an amazing investment opportunity. It has become very sexy in the last few years, but very few people have been able to really get into it at a high level like you have. Before we deep dive everything you do in self-storage, if you could please just share who you are and your story getting to this point, that'd be greatly appreciated.
Yeah, absolutely. So coming out of college, I ended up taking a job with General Electric in their financial management program. And Jeremy quickly realized for me that working for somebody else, I wasn't going to be able to have the kind of impact I wanted on people's lives and create the kind of lifestyle that I wanted to live. So I finished that 2-year program. I ended up backpacking around Europe with a couple of buddies. And so I think we visited 53 cities in like 21, 22 countries in 3.5 months. And I only mention that because I think it's super relevant to my story and how I got started. When I was traveling from city to city on the Eurorail, on the train, that's when I immersed myself into personal development. And for me, I knew I wanted to start a business. I just didn't know what that looked like. And the pain of going back to work for somebody else was greater than the uncertainty that I had around starting a business. I come from a middle-class family, worker mindset. Nobody in my family at that point had been an entrepreneur. And so I started reading the classics, the Think and Grow Rich, the Rich Dad, Poor Dads, all those books. And I remember I was in an internet cafe in Ibiza, and a friend of mine, Ray, sent me an email inviting me to a marketing for deals boot camp by a gentleman named Dave Lindahl, who you probably heard of.
Yeah, of course.
And he was putting on an event in Atlanta, Georgia. This was October of 2005, and it was $997. And brother, for me, that might as well have been $997,000. I had funded this backpacking trip on a credit card. I was going to be moving back into my parents' house in Miami at 25 years old. So wasn't exactly how I kind of envisioned things working out. So again, I had a lot of motivation and drive to really figure things out. And I ended up going to this boot camp. And 2.5 months later, I closed on my first deal, which was a short sale. And between myself and that buddy who invited me, we ended up splitting a $44,000 deal. And dude, I have been unemployed ever since.
Let's go. So we're talking 20 years.
Yeah, man. Yeah. Late 2000. So January 2006, I believe, is when we closed that deal. So basically almost 20 years. Yeah.
Wow, that's amazing. So self-employed investor for almost 20 years. You haven't really even had a taste of corporate America other than your 2 years as General Electric.
That's it. And if it's up to me, I'll never have a taste of corporate America again. But I'm glad you brought that up because oftentimes I have people, and I've had the benefit of just coaching and working with real estate investors and entrepreneurs going back to 2012. And one of the things I find holds people back, Jeremy, no matter if people are listening to this and they're interested in storage or they're looking to grow their residential business, I think getting clarity about what you want really holds people back. And if you don't know what you want, how are you going to know where you're going? One of the hacks that I have found is if you struggle getting clarity about what you want, ask yourself what you don't want. And then you can reverse engineer your way to figure out what you really do want. I knew for me, I didn't know what business I wanted to start. I just knew I didn't want to work for somebody else. And I certainly didn't want corporate America. So early on in my journey, I just discovered the importance of having clarity and then surrounding yourself with people that have been a little bit further along in the journey than you. Because at the end of the day, as cliche as it sounds, man, like you just don't know what you don't know. And so I've really leaned into the wisdom of counselors, coaches, masterminds, communities, and that's played a big role in my success.
people are always looking for the shortcut to success. And as you know, there is no shortcut to success. And, you know, a lot of people are afraid to not only dive into their dreams of real estate investor, but God forbid they have to come up with some cash to invest into some kind of mentorship program to actually show them the steps to success. As you being a coach in the space like I am, we have these conversations all the time. They're like, oh, you're not just going to teach me everything you know for free. Oh man, well, I don't have any money to get into that. But, you know, for us, like we invested that cash. And as you mentioned early on, you didn't have that money. And for my journey, the people who know me, you know, I sold my townhouse and took whatever little equity I had and invested into Tom Kroll's Wholesaling Inc. program back in 2016. And I have no regrets, right? And obviously you don't either. And I'm sure since 2005, just like me since 2017, we've continued to invest in all that ongoing coaching and masterminds and things of that nature. You don't get to where we are today without the help of other people. I think it's really important for people listening to know that is a critical part of your success, longevity and being in the right rooms with the right people who can teach us.
I never imagine a season of my life in which I'm not going to be working with a coach. In fact, since 2010, I have not gone, forget a year, I haven't gone 1 month without actually working with a coach that I pay on a consistent basis. Like I will always invest in coaches and mentorships because again, you are the very best investment you can make. There's so much of an uproar right now because of the tariffs and the market taking a dive and money comes and goes and real estate investments, like it's going to fluctuate, right? Like any portfolio, you will never long-term, you will never go up and down if you invest in yourself. You're constantly going to grow and evolve if you are working with the right people.
Yeah, I couldn't agree more. And honestly, myself too, I've never been without a coach more than a month. And it was only probably because I didn't find the coach I was looking for during that time, right? When I outgrew a coach, I was like, all right, here's another need. And I went and tried to find those type of coaches, and it brought me in a lot of great coaches. And still to this day, I'm meeting with my coach in a couple of days. We meet a few times a month, and
same.
Can't imagine being without him. And you're right about the real estate stuff. It, obviously it's going to fluctuate up and down. Everybody's like, should I buy the dip right now? Should I do this? Should I do that? I'm thinking to myself, what you should do is invest in yourself.
Yeah.
Because once you learn and get the knowledge, whatever investment you want to do, whether it's crypto or real estate or stocks, invest in yourself, get the knowledge, because that is the true ROI. And, obviously you've seen that firsthand.
1,000%. It's been said, Jeremy, that when you pay attention, and I'm sure you've experienced this, but when I've made uncomfortable investments in myself, whether it's joining a high-level mastermind or hiring a coach, and it stretches me, I tend to show up as a different and better version of myself than if it was just handed to me and it was free. Right. And the other thing I think people don't understand and recognize, especially when it comes to communities, is that you're also making an investment to be in the room with people that have made an equal investment. And it's not so much about the people in the room, but it's about the people that are not in the room. You want to be surrounded by people that are also choosing to invest in themselves. That's how everybody grows together.
Perfectly said. Now, so you started your journey in 2005, 2006, doing your first deal was a short sale. Now, short sales were very popular. The recession, which, killed me. How did you handle the recession during that time with the short sales? And when did you transition away from short sales? Because it'd be hard if I know anybody doing short sales today.
Yeah. And let me tell you, I think they're making a comeback in many ways. I have a few friends that are doing very, very well with reverse flips and short sales and things of that nature. But to your point, short sales were never like a super big main staple in my strategy early on. My first deal happened to be a short sale, but I want to say my first year in business, 2006, I think I closed 12, 13 wholesale deals. A couple of those were short sales. I made it's interesting. We just finished a conversation about the importance of coaches and mentors. Well, one of the biggest mistakes I made early on, Jeremy, is in 2007, right before the crash happened, I decided it would be a wise idea to get involved in my first fix and flip. And it was on a $500,000 property with a partner.
That was a lot of money back then.
Dude, we bought the facility, we bought the property for $505,000 in the Las Olas area of Fort Lauderdale. We thought the ARV was somewhere between 750 and 800. Obviously, you knew what happened later on in 2007 with the crash. Super painful, long story short, we ended up losing $102,000 on that project between myself and a partner. And up until that point, I've done close to 1,000 transactions in my career. I don't know the exact number, but I've done a lot of deals. And sometimes people ask me like, Alex, what's the best deal you've ever done? Thinking I'm going to tell them about this huge success.
Yeah.
And it was a success long-term. My best deal was that deal, the deal that I lost $51,000 because up until that point, I always view coaches as an expense. I didn't view them as an investment. And that was the catalyst for me going out, because I knew that had I had somebody walking alongside me, I would have never gotten involved in that deal. And so now to circle back to your question, fortunately, I started working with coaches, I think in 2008, and I was able to survive that very difficult period. And so, yeah, man, I tell this to my coaching clients all the time. The only way this doesn't work, right? Whether it's storage or single family, the only way it doesn't work is if you stop believing in yourself and you quit.
Yeah.
And that's one thing I never allowed myself to do. I just kept putting one foot in front of the other.
I was saying, our coaching clients or anybody in our community is those who survive, thrive. And what I mean is you just got to keep going, right? The longer you stay in the game, the more you're going to thrive in the game, right? There's going to be these inevitable setbacks and these challenges and hurdles you overcome. And obviously you going through that, I mean, it doesn't get any harder than that. I mean, that was the hottest time we've probably seen in the last 20 years. I mean, obviously probably the hottest time in your career. And you were just a couple years in, you had some success, and then you lose $51,000, which is a lot of money back then. I mean, you could make the argument that's close to $100,000 now, right?
Yeah.
And then you're going into the next 2 to 3 years of uncertainty in Florida, which is one of the states that got hit the hottest in the country. And you still had to find a way to pivot through that so you didn't have to go back to your job. I mean, that's a scary thing. And you still persevered through all of that. That's amazing, dude.
Yeah. That's it. It's a matter of expectations and mindset. I think oftentimes when people get involved in something or people have been doing it for a while, I expect that there's going to be challenges and adversity and setbacks. Now, I don't invite them, but I also know that because I'm investing in myself, because I'm growing through the pain, that I can deal with anything that comes my way. And I think a big part of it for me is just my faith and how I've grown spiritually, and my belief in God, and that no matter what I'm faced with, I believe I'm going to be able to overcome. And so while I don't openly invite the adversity, I know that it's just a part of life. It's a part of business. Not everything is always going to go and work out as planned. But if you believe in yourself and you continue to just, like I said, surround yourself with the right people and you keep putting one foot in front of the other, you're going to eventually succeed.
Yeah, it reminds me of a quote one of my former mentors, Ken Clothier, would say. He's like, you're going to get sued. And it doesn't matter if it's right or wrong. It's irrelevant. If you're in business long enough, somebody's going to sue you and you're going to have to pay money. And it's just the way it is. And it's just one of those things, you can do everything right and still be in a situation of some kind of distress in your business or yourself personally, as losing $50,000 on a deal. I just posted recently over the weekend that, on one of our deals that we did closed on early this year, I took a $32,000 loss on that. And, a lot of people on social media don't share that, right? They share all this success. But the reality is these things happen. But I don't want to share those to discourage people from coming in. I just want them to say, hey, you're going to have some losses along the way. But if you get in the right rooms with people like myself or Alex and really work hard, I mean, they're few and far between. You're going to have way more wins than you have losses, but losses are inevitable for all of us. Even the great athletes who make it to the Hall of Fame, like Tom Brady, right? He went to 7 Super Bowls. He lost a couple of them, right? Or 10 Super Bowls. He lost a few of them. Those are the ones he probably remembers the most, more than the ones that he wins, because those are the ones that we grow from the most as well.
That's right. And dude, think about, you brought up sports. Think about baseball, the Hall of Famers, the very best, fail 70% of the time.
Correct.
Right? They go to bat 10 times and they get on base 3, or they're batting 300, their batting average. So it's really a microcosm of how life and business are. And the difference is you're probably going to succeed a lot more, to your point, than you are going to fail, but you are going to take those L's. Yeah. And they're learning lessons. They're not losses.
Yeah. And don't let them stop you from achieving your goals. All right. Well, so when did you take this shift into self-storage facilities, and why?
Yeah, great question, man. And it's a loaded one. I made the decision in 2019 that the wholesaling business for me was no longer aligned with my goals and my vision. I openly share the mistakes I've made, so that the hope is that people can learn from it. Well, I did very, very well in my first 14 years in business. But the challenge is that I was on the hamster wheel, the transactional business. I was constantly wholesaling or fixing and flipping. It wasn't until 2018 that I started to buy and hold and build a rental portfolio. The problem is I realized that there was nothing passive about being a landlord. And I felt like there was a better way. So 2019, I made the decision, hey, I'm going to figure out an exit strategy, a plan for my wholesaling business. COVID came and it was a blessing in disguise, because it gave me a reason to accelerate the process. So I took a team of 9 people over the course of 6 to 9 months, and we ended up really just shutting down the business. And even though it was a profitable business and we were still doing deals on a monthly basis, I asked myself a question, Jeremy. I said, if I'm still running this wholesaling operation a year from now, how would that feel? And dude, it felt like I had created my own prison and I was trapped inside of it. I no longer wanted to be chasing deals and in the transactional business. So I was coaching somebody who owned a storage facility. And ironically, I got into real estate because I wanted cash flow and I wanted ultimately freedom, all the benefits that real estate gives us, appreciation, depreciation.
Yeah.
And I had all that with storage. So when COVID came, I said, you know what? I'm going to shut this thing down. I took some time off to really reflect and make sure that that's what I wanted to do. And later that year is when I ended up planting my flag on the storage asset class and saying, hey, I'm going to pursue this. Like, this is the mountain I want to now conquer. And then, since have done several storage deals. And now I'm fortunate to run a community of people that are actively looking to buy their first storage facility and helping them accomplish that goal.
So what I love about real estate investing, and thank you for sharing that story. It's like, I love people coming into the business as wholesaling. I think it's a great entry level into real estate investing, but I'm really strongly opinionated with, I don't think this is the end all be all, right? It's very sexy in the beginning. I love the fact that it really makes you focus on the acquisition side, right? How do you become a professional marketing company? How do you generate these leads and turn these opportunities into deals that actually close, right? That's a skill set that you need to get really good at and practice at and everything else. But it is a transactional business and you're only going to be able to do so much. And scaling isn't always the answer when it comes to wholesaling, right?
Not at all.
A lot of people, want to keep up with the Joneses. Very few will scale successfully, while many of us will just spend a lot of time, money, and effort to make as much money or less money in the process. There are other exit strategies that you should start to think of. You mentioned like flipping and, we do wholetailing and there's novations and there's obviously buy and hold for your small multifamilies, but some people want to get into large multifamilies like syndication. Some people want to get into self-storage. And I think you should continue to grow and evolve as an investor because as you find out in time, I think you're a perfect example of this. Sometimes you just realize, all right, I did that, I've done that. It's not what I want anymore. It doesn't align with my personal goals. I want to take this shift. Some people can just come in from zero and start that shift, but a lot of us need to find it along the way. I think your journey of transition there is pretty cool to share. So I like that a lot.
And brother, what I wish I knew when I made the transition is I had built it up in my head like commercial real estate. Like I see these big storage facilities and I knew I could have success because of my prior success. But I also in my head, I made it out to be something bigger than it was. What I didn't know then that I know now that I'm hoping people can really grasp is that if you're listening and watching this and you're a single family investor, storage is no different when it comes to the marketing and the lead generation. In fact, the very things that I did to do hundreds and hundreds and hundreds of residential deals is the same exact thing I do to find storage deals. So whether that's direct mail or cold calling or relationships with brokers and wholesalers and agents, it all translates over into storage. Now, yes, the way that we evaluate deals, there are some nuances, there's some differences. It's what we call underwriting, because in commercial real estate, the value is dictated by the revenue, the money that asset produces, and what's called the net operating income. Whereas in residential, Jeremy, it's based on comparable sales.
Sure.
Right. So there are some nuances there, but when it comes to raising capital, when it comes to marketing, when it comes to having conversations and negotiating with people and structuring deals, it's very similar. So the same ways that I structured seller financing and creative deals in residential is the same exact thing I do in storage. It's just a different asset class.
It's amazing. Awesome. So, you're pulling lists, I assume, of people that fall into a self-storage is it like an equity list that you pull or something like that?
Oh man, great question. So one of the challenges with storage, and I think it's more of an opportunity than a challenge, is the data when it comes to storage facilities is very different. It's not like I can just jump on ListSource and go download an equity list of storage facilities because of the zoning and the way it's classified from county to county, city to city. It's very different. So there are data providers out there that you can buy a list of storage facilities. The quality of the data can sometimes be debatable. I like to leverage virtual assistants, and we teach a very simple process to go on Google Maps and build organically a list of mom and pop storage owner operators. So it's the simplest thing in the world to do, and we just leverage virtual assistants to do it.
That's awesome, because years ago you leveraged virtual assistants to do driving for dollars in our communities to do that. So it sounds like you're doing similar, right? So they're going online and they're town after town or city after city looking for storage units and looking at them to see if they fit the criteria, doing a little research on the ownership, right? Is it a corporately owned thing? Is it a franchise or is it a mom and pop? And why do you target the mom and pops as opposed to the other kind?
Yeah, really good question. I'll give you an example. I live in Miami. Miami obviously is a very big city, millions and millions of people. And when it comes to storage, we focus, Jeremy, on what's called secondary or rural markets. So in other words, I'm looking for cities and towns that have a population on average 5 to 10,000 people, all the way up to 60, 70,000 people. I'm looking for cities where the population is increasing over time and where the median household income is at least $50,000 or greater. I'm not spending any time looking for storage in my backyard of Miami or big cities like Dallas, Texas, or Los Angeles, California. I'm looking for the small little cities that you may or may not have heard of. That is where the mom and pop operators are going to be. And conversely, where you're not going to have the big operators like Public Storage, Extra Space, CubeSmart. Generally speaking, I don't tend to want to be in markets where they are because I don't want to compete on price against those guys. Those REITs, what's called REITs, Real Estate Investment Trust. Yeah. They have deep pockets and they play the game of, getting customers in at a very, very low promo rate and then jacking up the price. And so generally speaking, I'm not looking at markets where those big operators are operating in.
Yeah. And their returns are different because they're based out of like Wall Street and everything else. So
100%. Yeah.
You identify these mom and pops all around these rural areas or secondary markets around the country. And then you're marketing out there. Is it always cold outreach? Are you doing just direct mail, cold calling, SMS? Do you do any like pay per click or PPL or anything like that? How does that work?
Yeah, no, it's pretty much like every single deal I have done has come from direct mail, cold calling, or some type of relationship / referral, whether it's a relationship with a wholesaler, a broker, a referral. I have a coaching client who just closed his second storage deal after 9 months of joining our community, and both deals driving for dollars. Wow. Right?
Amazing.
In Oregon, where he lives in Roseburg, Oregon, and he likes to go hunting. And so he takes these like road trips in Oregon. And one of the things I taught him, every time you see a storage facility, snap a picture, call the phone number on the sign, or stop in. Well, dude, he has bought 2 facilities driving for dollars. I have another coaching client that loves SMS. He uses a platform called Launch Control. Yep. And so he leverages, and that's his main thing. So like I said, most marketing works. The question is, are you going to work it consistently? But whatever you're doing for residential can be applied towards storage.
Now, what makes a mom and pop storage owner want to sell their property, especially maybe at a discount?
Great question. Most of the time, it's retirement. Most of the time, this part is unlike residential. You know how in residential, people are either selling because there's financial distress, there's physical distress with the property, or it's circumstantial. When it comes to storage, in my experience, most of the time it's circumstantial. Okay. Most of the time they're older. I would say the majority of mom and pop storage owners that we communicate with on a daily, weekly basis, 60, 65 years of age and north. They've owned and operated the facility for a number of years and they're getting ready to retire or slow down, right? Now, that's not to say that sometimes it might not be financially driven. I would just say the majority of the time it's based on them wanting to retire or slow down.
And then when these opportunities present themselves, I assume within your coaching program, you have a system to, talk to them over the phone, some kind of like call script, a way to evaluate the deal, how to build rapport. Absolutely. Look at creative ways of taking the property down, maybe not having to go get a loan for it, but if they have owner free and clear, maybe some kind of seller finance and things of that nature.
100%. In fact, every single storage deal I've done to this day, I have yet to use any of my own capital.
That's amazing.
My very first deal, I got a small business administration loan, so SBA, and I brought in an equity partner for the down payment that we needed, seller financing, private money, equity partnerships. I mean, there's a lot of different ways to structure deals. And I'm glad you brought that up, Jeremy, because I think one of the limiting beliefs that hold people back from looking at storage or commercial in general is this belief that they need to have a lot of money in their bank account. And the truth is, OPM, other people's money, it's like, it doesn't have to be your money. You just have to understand how to structure these deals. And that's one of the things that we go deep in our community.
Yeah. And I think that's really important for people to understand. So being able to find the self-storage is simple. May not be easy, but it's simple. And I'm sure negotiating some kind of terms to take it down with other people's money is simple, but not easy. But again, as you mentioned early on, you don't know what you don't know. So somebody with your experience can help you navigate any specific opportunity with multiple options and maybe find the right option, the best option for you specifically and the seller. Whereas if you don't know what you don't know, you may squander a lot of these opportunities and waste a lot of marketing dollars in the process.
Absolutely. And that's the irony of kind of circling back to our conversation earlier on in this show, Jeremy. It's sometimes people, I heard you say, like when you talk to people and they say, oh, I don't have the money to invest in that. It's like, well, what is that costing you? Like not investing in a coach or a community and not getting the knowledge and experience that you need. What does that cost you? I find that that's the question that people need to ask that they don't. And oftentimes it's just a knowledge gap. For some people, it's fear and mindset. For others, it's just a knowledge gap. And to your point, people squander away opportunities when they just don't know that that's still a deal. It's just you're approaching it wrong. But if you look at it from this lens or you structure it this way, then it opens up a whole new possibility for you.
I love it. I love it. You know, my wife, Shelly, she's been wanting to get into self-storage for a long time now. And,
brother, let's do it.
I'm trying to stay focused in my lane right now, but, I know who I'm calling when that time comes. And, it's really exciting.
I love it.
And, I know you mentioned like owning rental properties is definitely not passive, right? Even if you sub out the property management to somebody else, you're still involved. Now with self-storage, I mean, the wear and tear in these facilities is nothing compared to like a residential living, right?
No, man. Yeah, you're spot on. Dude, like I've done my fair share of fix and flips and I've turned over units to make rent ready. Like I've done all that. I'm not a very good fix and flipper / rehabber. Not to mention, I don't like it. I'm not a handyman. If you ask my wife, she would say he's definitely not a handyman.
You and me both, brother.
When it comes to storage, man, no toilets, right? I mean, it's just, think about it. We're talking about 3 walls and a metal garage door.
Yeah.
I mean, it's just space that we rent. And so, no, that's not to say that we don't have what's called CapEx, capital expenditures. But generally speaking, man, it's pretty simple stuff. We're talking about doors, springs, hasps, sometimes roofs, right? But outside of that, it's not super in-depth and complicated. And I like the simplicity of it. And look, I will never say that something is truly passive unless you're just like a limited partner or you're like putting money into the stock market and not doing anything. Okay, that can be passive. But storage as a business, right? And storage, like, don't get it twisted. It is a business with the benefits of real estate. It can be very semi-passive.
Sure.
A lot of the time and energy is spent finding the opportunities. But once you have a facility, you stabilize it, meaning you have high occupancy, it can be very hands off. Now, you still have to manage the manager. You still have to keep an eye on the numbers like anything else. But dude, up until 6 months ago, I owned, I think it was 838 units across 104,000 net rentable square feet. I sold 80,000 square feet of storage in a particular market I had. But I only mention that for context. I might have spent an hour and a half to 2 hours a week on that portfolio.
Wow.
So is it truly passive where it's like you go to Tahiti for a year and come back? No, but it's very semi-passive.
Yeah. Well, you can also just call and text while you're in Tahiti and, with the team to make sure it's all
good. You certainly could.
Awesome. Well, Listen, that's a lot of great information, Alex, and I really appreciate you being on the show today. As we wrap this up, like these people listening, if they don't want to join your coaching program, they need to think long and hard why they don't want to, because it sounds like a great opportunity. Can you share a little bit more about your coaching program, please?
Yeah, absolutely. I mean, look, it is all designed around helping people that have the right mindset and are willing to follow our process buy their first storage facility within 6 to 12 months. Like that is how we define success.
Wow.
So if anybody's interested in learning more about that, storagewins.com/apply, storagewins.com/apply. And for anybody that just wants to go deeper and just maybe consume more content about storage, I've been committed to putting out more content about storage and helping people get started on my YouTube channel. So youtube.com/Alex Pardo, just my name. And I put together a playlist there of how to buy your first storage facility. So it's a string of videos that can just walk you through the entire process.
I love that. And we'll put all that in the show notes so people can look into that as well. Awesome. Alex, any parting words as we finish up this episode that you'd like to share with our community?
Yeah, look, no matter if it's storage you're interested in or whatever it is that is your main focus, just continue to take action and move forward, right? Like one of I think the biggest ways that you can gift, reward, compliment us is by taking something that you've learned and then just apply it in your life and business. and then do that consistently, iterate, learn from it, and keep doing it. And that is how you're going to grow. And it's amazing how far you can, like, how much success you can achieve in a year, 2 years by doing that consistently. And sometimes I think people are there's a lot of false starts, to use a football analogy. Like, they get started, they slow down, and so they never have that momentum build up. And I'm hoping that people can grasp at least one or two things that I shared here today and then just apply it in their business.
Yeah, I think they will. And this business is all about momentum. You got to keep the foot on the gas pedal. And what I love to tell people is 5 years in corporate America, you don't achieve too much. 5 years in real estate investing can change your life drastically.
100%.
Right?
100%.
So, awesome, Alex. Thank you so much for being on the show today. Really, really appreciate it. Great stuff. We're going to drive everybody to your content because, that's the place to learn for self-storage. So thank you so much for being on today.
Thanks so much, Jeremy. Appreciate you.
Guys, isn't that an awesome episode with Alex? I mean, it just shows you, this is why we call it REI Freedom. Freedom through real estate investing comes in many different ways, whether that's wholesaling, flipping, buy and holding properties, even self-storage. We recently had Chris on when he was talking about creative financing, where he's not putting any money into these deals and he's owning properties. There's so many opportunities out there for everybody. What is the niche that you want to focus on? If it's self-storage, Alex is the guy you need to go to. Until next week, guys, continue to build your life of freedom through real estate investing. And hope you guys have a great week. We'll see you then. Take care. Bye-bye.
Join us on our journey to achieve ultimate freedom through real estate investing. We understand that the road to success isn't easy, but together we can overcome any challenge. Please subscribe, rate, and review our podcast to help us grow and reach more aspiring individuals. Visit our website to access additional resources and join our email list. Follow us on social media at REI Freedom for more updates. If you're interested in our acquisition coaching programs, visit reifreedom.com for more information. Let's go.